What's up, everybody? July trading recap, $279,000. Back-to-back best months ever. Thought June was pretty crazy. Well, July was pretty crazy too, and it just so happens I beat June by about $2,000, I believe. So crazy stuff. I'm just gonna try to keep it up, try to keep this madness going, and yeah, we'll see if this trend continues. I don't really anticipate it to continue because this is just pretty crazy growth. What can I say? Just craziness. Very grateful. Pretty much lost for words. Just absurd back-to-back months. So, look, for this video, I'm just going to go over some spots that are on my mind, kind of fresh in my memory, of some big spots from the month. And I'll just talk about them, and let's get into it. So, I want to talk about INTC. Now, this was a very nice momentum play. Reason being, look how sold off it is. In the long term, very sold off, 28-3. In the short term, very sold off. I had a bad PR, had a gap down, but you're still looking at a spot. It goes from $8.80 to the $3 range. That's a very significant pullback. A bounce really wouldn't surprise me that much. And historically speaking, when it finds that downside, it is capable of bouncing, and it's shown that time and time again. That is why when I saw it on this date, the 27th, so let's just go to 27th. So look, I saw this play hit the new high of day scanner multiple times. Okay, it hit it here, it hit it here, it hit it here. You're talking about all morning long. This thing was hitting scans all morning. And so it hit it enough times that I'm sitting here like, yeah, you know what? Okay, let me just take a look. I take a look. What do I do instantly when I pull up any chart or any stock? You look at the multi-year, look at the multi-month. It takes 2 seconds to analyze it, and it's very important information that you should always be analyzing. That's when I saw how oversold it was. And on the intraday, again, if you can see a correlation, well, yeah, there is a very strong correlation, strong intraday bullish pattern that correlated with a nice oversold chart on the multi-year, multi-month. A thesis comes out of that to the point where risk reward is starting to look quite good. I saw it hovering. VWAP was around this area all morning, and it's just hovering. It's like holding and kind of uptrending. Those are pieces of information that I used to allow me to say, okay, I'll take a shot. What I'm doing is I'm just looking at the information in front of me that everybody has access to. It's called a chart. It's called information on the chart that you have access to, I have access to, we all have access to it. If the information is good information that suggests the risk reward on a play like this can be good, well, I'll take it. Held the range all morning, starting to break out with some volatility, with some volume. I started scaling in, and it's really easy to scale in on a play like this because your risk is basically just right underneath you. It's like if it doesn't start uptrending and it gets slow and starts to come down, I'll just cut it. It's not a big deal to me. That's the main thing that I want to get across in this video. Trading is just statistics. That's it. It's just we're throwing the dart at the dartboard. We're trying to hit a bullseye. We don't know which ones are going to be good hits. We don't know which ones are going to foul. But if there's enough factors to support a thesis, I'll take it. It just so happens this one found a really strong uptrend, and I decided to just hold on. It's like kind of the trend I noticed the last week or two is when things get hot, they're finding strong uptrends and they're running for quite a long time. But it's hard to find what's hot. It kind of felt like I didn't have good insight or preparation into the stocks that were getting very hot. It kind of felt more random But those stocks that got hot, they really got hot. So once INTC got really hot, it's like, okay, it's holding healthy consolidation, healthy trend, flows right into a halt, so I can just hold. Again, it's not really giving me a reason to sell. It's holding overall trend. It didn't break down. It didn't get ugly. It just held a nice frontside trend. And it surges into another halt. And then in this area, I'm going for, I was just in a mentality, let me just keep pushing my luck. Let me keep going for a home run. Let's see what happens. I wanted to give it time to truly either work or fail, is kind of what I'm saying. So I did give it plenty of time. It was kind of a zone where it's either could surge up and continue or feel weak and start to break down. It started to break down, I get out. I locked up a really nice chunk. Just a nice meat of the move play. The 380s to the 570. And I made a lot of money on that. So that was a great play from this month. And you can see there is even an opportunity to get involved. Now, I'm a little less comfortable with these types of plays. But hey, it did. It pulled back. It held. It's hard to kind of pull the trigger on these things because it's like, okay, well, you could use that same logic for this area and then you end up maybe getting scared out here for a loss. Whereas this area holds, you get in, and then this area just flows to new highs. It's certainly a bit more random. It's a bit harder to trade, and honestly, I just sat it out. I just sat the spot out. I wasn't sure, so I just didn't take it. I had already made, how much did I make on that? I feel like I made $10,000, maybe more. I'm not sure, but I had already made enough and I just wasn't sure, so I sat it out. I do it all the time. If I'm not comfortable in a spot, it's okay to sit it out, watch, and learn, okay? That's something that's important in trading. Alright, so let's talk about CPOP. I made a big trade on this on the 20th, I believe. Reason being, it's a recent IPO. It was $78. It sold off all the way down to $9. That's a crazy sell-off. It's crazy. It's a crazy sell-off. And actually, no, I played it right here. I played it here. It was $6.80. So this is the idea. The idea is it forms this wedge where maybe you would think about watching it for a bounce here, or it would break down and continue selling off. But what happens? It breaks down, but you would expect, if it confirms here, you would really expect that panic to continue and for it to be a strong breakdown. But instead what we see, it holds this range, or it doesn't sell off that much. It holds a range. And then what I was anticipating, it would kind of be like a false breakdown and then a recovery where it would just have a very strong bounce. I thought that a play like CPOP could bounce to maybe like $15 a share just because of where it's coming from. Okay, so I thought this had crazy upside potential. And I ended up playing it on the 20th because that's just where I saw development that I liked. First off, it got my attention pre-market because of these prints. This was on a new high of day scanner because it's making new highs in pre-market. So I suggest you use a new high scanner alongside percentage gain scan. And if I see something, I'll go ahead, click it, look at it, and then analyze the long-term chart. And I instantly liked it, the thesis. So then it just becomes a spot where you can decide to play it or not based on the development or structure that appears. And it held a range. It dipped in the morning, so a morning dip, but then look, it held a really nice range. Whenever you get a price range hold, well, if it breaks out of that trend, it could retest the pre-market highs, and if it breaks out of that, the long-term chart thesis can come true and you can get a massive bounce. So on this day, I took it in this area and a little bit in this area. I got a really great bounce. It was looking really good. Okay. And I was very patient. I was not in a rush. I legitimately thought this was going to at least test 10. And I thought if it broke out of 10, I could get $12 potentially. I mean, this had potential to be a home run. Just a grand slam out of the park. It had all the criteria that I look for. Now in this area, okay, I had been in for a very long time. It just becomes kind of the situation where I feel like it should have worked by now. It didn't work here. I gave it another shot. It developed again. It tried here. It tried here. It just became apparent to me something's wrong. You know, it's not as strong as I thought it should be. And it began to actually break down and confirm that it's not working. So I cut my entire position in this $8 area. Now that was just a great trade. I believe I made over $20,000 on this trade. So just a great trade. I mean, I think I may have tried a couple shots in here. I think overall maybe slightly winning, but nothing significant to even bring up. And you can really see how sloppy and choppy this became compared to the morning where it was just a very straightforward, just a nice development where you can time a good entry, clear risk, just great development there, you know. So I guess it's just a nice example of how you get a thesis that's formed from looking at longer time frames, and then on short time frames such as the intraday, some very nice structure appears that you can time that intraday entry to have that proper risk reward ratio that correlates with the longer term chart. Okay, so that was a nice play on CPOP. Let's go over CARV. So this is actually a very recent play from Friday. It is Sunday right now. So look, I saw this development. CARV went from $42 to $14. That's a very significant pullback. And now I noticed it's holding for multiple days. So what does that mean? Well, I figured if it breaks down and fails the trend, we're going to get continuation. If it breaks up, we're going to get a bounce. And again, these bounce plays, I mean, they can do wild stuff. So I, again, thought that something like CARV could actually bounce to $18 a share potentially to kind of test this former, I guess you could call this resistance now, because it broke down. So it's going to test that resistance as a bounce. Okay, so let's look at the day of. And this is just an example. Things don't always do what you want. Okay, they don't always do what you want. Sometimes your plans aren't going to work out. It doesn't mean you have to feel bad. It doesn't mean you have to be hard on yourself. It doesn't mean it was a bad trade. It doesn't mean you were greedy. None of that junk. Okay, none of that junk. It's just what trading is. Trading is simply flowing statistics. We're trying to do our best. Sometimes those statistics don't work, but in the long run, okay, in the big journey, the big scale, these trades are profitable. They're profitable trades that will come together in a big way when you're looking at overall results. This is kind of the view I was thinking about. I noticed the day before it had perked out of this range, it gave a really nice pop from 1470 to 1550. It's a nice perk. So I thought, okay, this is the beginning of something much bigger. The beginning of a much bigger bounce. And you can see it held the range, or it held this channel. So then you get this descending channel into a curl. So I took 10,000 shares in this 15 area. I think my average, by the time I scaled in, I took 5,000 shares at 15. I took 5,000 shares at 15.20. Debatable. It's a debatable entry. I don't love it. I wish I could have got just all 10,000 around 15, but hey, it is what it is. Sometimes these things happen. So I had a 15.10 average. It pops up and it gets to 16.10. I was up $10,000 at this point. I still thought it could go to $18 based on the long-term chart. Why am I going to sell it here at 16.10 if I legitimately believe it can go to 18? I'm not, simply put, I'm not. And I'm okay with following my trading plan. That doesn't mean it's bad. That doesn't mean anything. All it means is I had an idea of where that price was going to go, and it failed to go there. Oh well, that's called trading. It's like a game. You're just trying to use your best estimate to get the best score. If you don't do well in a game that you're playing, are you going to cry about it and call yourself greedy when you didn't? I'm not going to go off on a rant, but I don't like the word greed in trading. It's trying to apply an emotional, bad word to somebody who's just playing a game. It's just, I don't like it. You can be wrong. Your idea, your plan, it can just be flawed or wrong, but I don't like using the word greed. I just don't think it's proper. It just doesn't work. Anyways. Look, it breaks down and gets very weak. I tried to follow my plan. I thought, okay, it might, I've seen this a lot this week where it'll perk up, it'll come back down, hold support, and then continue, consolidate a bit, right, and then retest and break out. It didn't do that. It got so weak and so liquid, I said, hey, I don't think this is going to work anymore. I'm going to go ahead and cut it. So I got out at 1540, my entire position in the 1540. So I made $3,000 on a play that failed, and so this is just an example. Hey, sometimes your plans aren't going to work. It's not the end of the world. You get out with a small win or a small loss. It's not the end of the world. But I think that once your plan does kind of show to be flawed and things do start to get really weak, don't hang on. You got to stay logical and accept the facts. And the facts are, this is weak, it's not continuing, you have to get out. I got out, I saved myself a lot of headache and potentially a lot of money because it got pretty ugly. So I just wanted to show that, not really as like a great trade or anything, but just something, a good learning experience from this month. Good takeaway on that. And then there's NRXP, and this play has been hot for a while. Each day, very volatile. And I want to talk about an after-hours trade that I made on it. So let's look at the multi-day. Okay, so on this day, there's some key takeaways that go into this trade. So it was like a multi-day flow. It perks pre-market, it finds an incredible uptrend, then it forms kind of these higher lows. Okay, now here's the thing about stocks that are holding bullish ranges. So you kind of get this area. It's just consolidating and flowing in that area for quite a while. Okay, so you can see clearly it's kind of just forming this overall trend, just an overall consolidation trend that correlates with this zone on day one. So whenever a stock is holding an important price zone, if it starts to break out over it, it can make explosive moves, okay? Now, my take on trading after hours. Okay, I don't like to hold stocks into after hours very often. It's very, very rare that I do that. What I like to do is just wait. And in after hours, if that stock is trading, you can see, is this stock trading after hours? This NRXP was. So there's a lot of liquidity after hours. A lot of things are happening in after hours here. I missed the best entry. Let's get rid of these lines. So I missed the best entry. It starts to curl here. At this point, I just wasn't watching it, and I missed this whole run just because I wasn't watching. But as time goes on, I noticed it held a really great trend to the point where I'm sitting here thinking, this is perfect consolidation right at the high of day. If it starts to break out of that, it could have a massive after hours run. I love this. I really just, it was great. I took shares in this area and had to hold through a pullback. And it was scary because I was in I think I took 2,500 shares at 1840. Look, I held through a pullback to 18. I'm not proud of it, okay? I'm not proud of my entry because technically this entry wasn't that great. But I was aware of the support level that was appropriate to risk. And that support level, in my opinion, it was this horizontal. You can clearly see it's flowing and finding this horizontal around this 18 area. So I knew I had to risk it. I knew I had to just hold on. It's not going to be fun, but I have to risk a proper zone that the play tells me this is where the support is. You should be risking it. If you have a sloppy entry, well, you still have to risk the same support. That part doesn't really change. And then I get the big run, and I hold patiently to the scale. I felt like this scale, well, it broke out in the morning from 13 to 18. So if it breaks out in after hours, it could go from 18 to 22, because that's another $5 a share. And I held to the scale, and I locked up a really nice win. So I locked up in the area, really great $10,000 win, I believe. Or was it 5,000? I don't know. I don't know, but the trade was nice. So there's that. There's also, it pulls back, it holds another range, and kind of you get the idea of how I like to trade. I like to view ranges that hold for a while, and it makes a lot of sense. It was up at 25, it pulls back to the 18 area. You get a range hold, and then I'm scooping shares, anticipating that it's going to curl and kind of retest the levels. These levels up here. And it did. And so that's another great play. Okay, so that's the plays on NRXP, and the big trade, the $44,000 trade, I mean, that's kind of just the same idea. It pulls back at support, holds a range. I took shares anticipating that it's going to bounce because it's a volatile stock. So same idea behind that play. And the reason why that play was so significant and I nailed it is simply because, well, I got lucky and hit my ideal upside. There's times where you're just going to nail the trades. You're going to just hit a bullseye. You're going to nail it, okay? That's luck, right? That is a luck factor involved in that. But there's a skill factor to get you in that situation to be able to hit that lucky hit where the play will go as far as you actually think it can go and actually get filled and executed perfectly, and bam, great trade. There's going to be times where that doesn't happen, okay? There's going to be times where you think a play can go somewhere, you try to follow your plan, and you end up losing a lot of profits back. It happens. It happens. There's nothing wrong with that. We can just try it. You just have to try your best as a trader, okay? I screw up so often. I am wrong so often. I get back tons of profits so often. It's a part of the game. Don't shy away from it. Don't feel bad about a fact of the game. It's facts. It's going to happen. It happens to every successful trader. You're going to screw up, okay? Your ideas are not going to happen, and that is okay. I just want to explain it's okay. All right? We don't gotta you don't gotta feel bad and torture yourself. It's just statistics. In the long run, we're trying to be right, and we're trying to nail our trading plans, and overall you're going to make a lot of money, okay? But perfection is not a thing in trading that exists, so you should probably be easy on yourself, you know? Of course, you can be critical when you're just flat out making huge errors or not cutting losses or things of that nature, but when you get a really nice entry and your play is flowing and you're trying to follow your profit plan, don't feel bad if you lose a lot of profits back, because it's going to happen. Alright, XBIO, beautiful multi-day development. One of my go-to patterns, one of my favorite TA setups. Just great. You look at that multi-day, you instantly know it's a watch, okay? On the day, it's consolidating. I get a really nice entry, 25,000 shares at 336 average. So, you know, just scooping in this area essentially when it held all morning and flows into the afternoon. It's curling, which to me it suggested, okay, it's confirming to the upside on that multi-day scalp. It could continue. It could make new highs on the multi-day. Big spot. And then I got emotional. Look, I just wasn't feeling it this day. I just did not have good vibes. It was Thursday. Nothing against Thursdays. That's just the day it was, and I just wasn't feeling it. I was off my game. I didn't feel confident. I just had this underlining kind of feeling of nerves all day. Didn't matter what play, it just all day. And it was a challenging day. It was a choppy day. The developments were taking a very long time, and not only did they take a long time, they chopped a lot in between. Very unnerving, you know, just very hard, difficult trading on Thursday, in my opinion. Doesn't mean the opportunities weren't there. Obviously, you're looking at XBIO. It was a great, amazing opportunity. So I got emotional and I sold it right here. It's just, I broke a trading plan. Okay, I broke a trading plan. I got emotional. It happens. The more experienced you get, the less often it's going to happen. It just is what it is. So my plan on this was to get at least 4, but I strongly felt like it could kind of fit the scale. So basically on the day one, it went from 224 to 470. So that's 250 a share. I thought if it broke out, okay, we're going to be looking at a fresh breakout. It could go from 340. What's another 250? Well, 590. It got there. Okay, the scale worked itself out eventually, and it got there. I prefer when they get there a little faster, or at the very least, if the flow is a bit cleaner. This chop can really make you emotional. Made me emotional. It's just a big spot. I probably, realistically, would have just sold in the 4s. But anything is better than that 355. You know, even if I get like 405 on this breakdown, anything would be so much better. Obviously, I mean, of course. After hours, I really like this structure and development. Again, it's a liquid after hours. It's forming structures after hours. So I can justify taking a play on it after hours. Okay. Initially, I got in this area. I got spooked out on this breakdown. I got spooked out. But I noticed it held and then perked up again. I said, well, okay. I mean, I'll try again. So I got involved again. And this time it worked. And I was able to make $10,000 on this. I actually sold it right before close. Just basically, I ran out of time. You know, I really felt like it could hit 7. I tried to give it time. Maybe, I don't know. I feel like I got kind of lucky even to get this exit, because realistically, I should have been cutting here when it kind of showed me it's weak and coming down. This could have lost all of these gains back. Like, I could have got burned on this. So honestly, I don't even like myself. I think I should have sold it far earlier. I should have locked in profits in this area, and I didn't. And I got lucky to find it again. I didn't like holding it overnight because I felt like my entry could not justify a swing because I got in too late. I only swing if I get perfect entries, and I'm really confident that it can do it. And I just wasn't overall wasn't confident that XBIO could gap up. Very tricky market this week. Things really weren't going parabolic the way we had seen in the past. So I really just did not have a strong enough indication. And sure enough, it actually gapped down the next day. So I'm very happy I locked up that profit. And that was a $10,000 play after hours. So, all right. I think I've rambled about enough plays. Let's see. 22-minute video. Yeah, that's fine. I mean, just a quick recap talking about some fresh spots. Yeah, I think I covered all I wanted to cover. Just another incredible month. Going forward, just business as usual, right? Just showing up and trying my best. But it does not mean I'm pushing for new highs. It doesn't mean I'm pushing to sustain. I'm not going to try to sustain these gains either. I'm just going to show up and try my best. Whatever happens, happens. The money that follows, follows. But in trading, it's very important not to force anything. Let it come naturally. Try to flow with your skill level, with the sizes that you can still trade and not be emotional. It's a push and pull, right? You always want to try to push yourself, but if you get shaky, if you're trading emotional, if you lose some money in a way that you feel just wasn't appropriate, wasn't proper, maybe a bigger loss than usual, that's when you want to take a step back, size back down, reevaluate, go back to your basics. Just trade safe, guys. Trade safe. Trade safe. Be responsible. Stay logical. The money follows. Okay. Thanks for watching. See you on the next video.